Alrighty. Doc here from North America. It is TGIF, the end of this week, and it's been interesting if nothing else. I mean, inflation, the Fed chairman talking about it being transitory. We're seeing strength and weaknesses in many different areas. I mean, it goes on and on and on. And, it's a, you can see, let's see, do I have it on there? Let me just shift this one over. And let's take a look at the Swiss again. Let's move that up and let's see, move that up. That's the short term. That's right. We left off with the Tech 100, the Nasdaq 100. And the action that we were seeing with the news right there. Let's take a look at the Swiss against the dollar. It's been in a daily buy for a couple days. There's the fact check spreadsheet right there. Okay, there we go. And let's see. Oh, and let's get the chat line up. Make sure that everybody's getting a chance to say something, or multiple times. Right there. Doc. It always cracks me up when they have the stethoscope on there,
Meet Kachava.
All right. I don't see anything particular at the moment. Nope, no one's jumped in so far. I guess everybody's trying to get their game together, being a Friday. Ah, there's Moses. Hey, Moses. It's basically the end of the week, and for some of you, it's already Friday night. That whole gig is going on. So let's see now, and let's get the fact. As I got the fact checked up, you can see on Dukascopy, you see the hinky ashy bar going into the green. Let's take a look at where it's at on Chicago Quant. Let's see. And Moses, also, if I don't say it towards the end, I hope you have a nice weekend. Have a safe and smart weekend. But I figured I'd say that right now, just so that I remember, because by the time I get done the webinar, I'm going in 3 directions. Let's see. Let's get that up. There's the Dukascopy day and week Forex. Let's get that up there. And here it comes. Putting it up on the short-term chart, which is kind of neat. And there we go. Let's see how the stocks acted from the information. Let me just go back to that really quick. We'll take a look at the Nasdaq 100 that we had on there. Where is it at? Right there. Here's the S&P 500. You can see it's up 10 full points, almost 975. Right there. And so since the news has come out right here, it's been a little pressure. So they ran it up to the news, and now it's just sideways. Whereas, let's see, the Dow Jones Industrial Average, which is right here, same situation. Where's the 930? 730, right there. Right there. Now that lifted up from the news. Let's see if we can find that right there. Something's odd. There it is. No, it's moving down also. Not much, but it is moving down. And then the Tech 100 that we showed you on Dukascopy a few seconds ago, you can see that has moved up from it. So it must have given them the confidence that interest rates. Oh, thank you, Moses. Hey, AT, Alan, Tommy, how you doing? Have a safe and smart weekend. I figured I'll say that to you at the beginning of the webinar instead at the end. You can see the action is pushing must be the interest rate. So let's take a quick look. Put the interest rates up there. Right there it is. And let's jump over to, there's the 30-year right there. Now it's moving down a little bit. When this goes down, interest rates are rising. So, not sure what's going on there. It is trying to get into a daily buy. You see, we had the volatility signal yesterday, but it perked up and then is dropping. We're still in the weekly buy. Been in a weekly buy for a while. Can shoot over to the 10-year. See what they're doing to the 10-year. 10-year is doing the same thing. Tried to get into a daily buy there, and at the same time it's moving down. They threw a red dot on me after the close. How about that? And the computer system does what data it takes in. So there's a shift there. Also, I'm playing around with a couple different combinations. I got the GAS and the GAS 3 laying on top of each other. Just interesting. It's both doing standard deviations 1 and 2 against my my mathematics. So it's always interesting. Thank you very much, Alan. AT. All right. Let's see. What do we got going on here? Let's jump back to the currencies. right there. And let's take a look at the, no, that's not it, that's the intraday. We'll go like that. And then now we'll jump to the currencies right there. Let's take a look at the Swiss against the dollar. You can see it's been a little firm in here. It's 3 full days in a daily buy, holding up for a 4th day right now. You can see it's been went into a weekly buy this week right here at the close of that week. We put the line in. You can see it's really hasn't gone too far. As a matter of fact, it's as high as it has gone up, it's gone down. So it's been as much as it took this week. I mean, you know, that week back in June, at the beginning of June, June 11th. Let's see, right there. There's 10th, 9th, 10th. It must be the 14th. So it went into the daily buy on the 11th. That was the Friday. The 14th, you can see it was just a couple days of nothing, and then 3 days of solid buying. I mean, the Swiss were ahead of the curve. They knew that the dollar was going to be firmer, and they made that run. U.S. retail sales up. That's the reason for a quick spike. Yeah, and I guess it's a great debate going on. Growing economy, not growing economy. They're figuring that next year, 2022, 5 months away now, or 5.5 months, 5 months away. They're figuring that the economy will still be growing, but not at this rate. And that's why the Fed is talking about it being a transitory inflation. And as I said, I think last month, we'll really know if we don't see a sign of inflation dying down by August, it's going to put a little chill into the market. And so you're going to have some selling going on, and we'll see how well the Federal Reserve allows it to go on for. They may try to pretend that that they are not influencing the market 12 months out of the year, 365 days out of the year, 24 hours of a day, 7 days a week. They're going to try to pretend that they don't do that. We all know they do, though. So, back in the day when I was told that I must be wearing tinfoil on my head for suggesting that even the Federal Reserve, would you believe in 2008 and 2009, when I was telling, and 2007 I could see it too, but when I told professional traders that I traded with that I saw that the Federal Reserve must be influencing the marketplace, they said, a couple of years ago you would have had to been wearing tinfoil on your head to say that. Now we're starting to be a little confused, but then in 2010 and 11, when it became very clear that they were 100% involved in our markets, people said, how could you tell? I said, how could money be so stupid? That was the bigger question I said. How could you not see how stupid the markets were? And they said, we did, but we didn't understand. Well, that's a pretty kind of generic way of responding as far as I was concerned. You didn't understand. How do you buy and then buy higher? People who buy and buy higher usually lose money, because when it back and fills, they've had too big a position on to compensate for buying higher. The idea is you buy low, sell high. I guess in the world of QE, people are confused by that. But in the end result is that that is the natural way. Now what happens is that when short-term traders try to buy and then buy more, in other words, grow their position, what they're doing is they're averaging up, not averaging down. So when it breaks down and falls down to halfway where you started, you're losing money now. You're not making money, you're losing it, because you've been averaging up. And you could see that, I could see that in 7, 8, and 9 at night. The futures would try to sell down, and an invisible hand, an invisible buyer would step up and not allow them to drop, which meant one or the other. They had more money than anybody else in the marketplace, and they were confident that they could keep on doing this. Or there was a stupid buyer out there that was going to lose their money. Well, we've learned after 11 years, let's see, 2008, 2009, so 11 years is 2020, we're in 2021. So 12 years, we now know 100% the Federal Reserve is the buyer of last resort, and they buy and then they buy again. Now you could use a couple of examples, like why did the crash of 2020 in February, March, which our math also spotted, and we did it in the webinars and explained, and we called it the V bottom in March, and going into April, and we told people they could buy now because the volatility funds were trapped, and they were forced to short at any price to try to survive. And 3 of the 5 went bankrupt. The other 2 were able to lick their wounds and get out of it and never go do it again. So all those billions that they made, ounces, 5 billion call options supporting the dollar CAD. Ah, interesting. Let's check that out this morning. Dollar yen, 110 call options in the market. They're getting ready to expire. When's the expiration on that? It's got to be right. I mean, literally right, like right now, right? I mean, we are in the futures market. The options should be expiring literally this Friday. I mean, they should be like literally right now, I think. So, so in the end result, traders, is that what we see is not normal. This is not normal trading, and you do your best to trade. Currencies seem to be the best place to be. You know, I'm not sure how we ended up in this conversation. I know what it was. The idea that money is watching to see if this is transitory inflation, and that's what we're really watching for. And if we don't see it, and I've mentioned it last month and the month before, if we do not see a diminishing of the inflation going into August, that's when the Fed will step back a little bit and allow some of this to fall down. Now, how far they let it fall? I don't think it's going to be that calamity-like. They'll just let it fall and that'll be it. I see Moses says 10 a.m. New York time. No, it's 8:43 right now. Or the expiration. Usually the futures options go out at the bell, Chicago time. At, was it 2 o'clock? 1 o'clock or 2 o'clock? Something like that. It's something like that on these currency options when they're in the futures market. Now, the Chicago Board of Trade, the Chicago CBOE bought the Philadelphia cash currency option market. And so that's a little bit different. That should be on the Friday of the third Friday of the month. And then from there is the delivery of the cash. You know, in other words, once you exercise the cash, you're going into spot. And then then you do your delivery thing of the spot. You know, when you exercise the spot, which if it's the yen, it's 3 days. If it's the euro, it's 2 days. That type of thing. Leading oil. Okay, yes. Let's go check. First, let's go over to. Let's see. Where is it? Or are you actually stating something that's true, Moses? That could be true. I don't know which options they are. I don't know if they're the old Philadelphia currency, cash currency options, you know, the spot, or the Chicago mercantile future options, which normally would expire at the close of Chicago time of trading. Let's see. Let's go to Canadian right now. Right there. Now the Canadian, you can see, has been in also, like the Swiss, in a buy for about 3 days, going on a fourth. And also back in June, that same week, it went into the weekly buy right here. Now that didn't take long. It was on the 11th, whereas I think on the Swiss it was the week of the 15th or something like that. Let me just go look at the Swiss again real quick. It was a week behind, yeah. So it was there's the 11th right there. So a week ahead of it. And it almost made it, you can see here, we're running a 3.5 here. Let's see what we run on the Canadian because of the beta of it. Yeah, we're running a 3.5 there too. Now, let's just take a look at the internal real quick. Format signal. No, not signal. Format indicator, there it is. The 3.5, what we're looking at here is... Alright, so we're just running a 3. So the Canadian is just running a 3. Let's take a look at the beta on the, let me just double check the beta on the Swiss. Indicator. Yeah, so it's running a 3 on that too. Okay. So might have to adjust. I might take a look over the weekend and try to adjust the 3.5 a little bit on the weekly. See if we can come up with a little bit better. Matter of fact, I can show you what I'll be thinking. I'll show you what I'm thinking about. I'm going to throw the 5 in. Let's see. Right now, just to give you a flavor of it, what I'm going to be doing. You know, it's just like a learning lesson. The ones Alan mentioned. Let's see. Alan says the dollar CAD, my leading indicator for oil prices. Yeah, I know. I used to follow. Normally I do. I between that and the we've been looking at the euro against the CAD also. That's been a very good indicator, a leading indicator. Let me just do this. I just want to do this real quick. We're going to make this dashed line. There we are. All right, that's the 5. So where was the 5 on the 11th? I'm sorry, the 6. The plot 6 was still minus, so it didn't help it any. Okay. It was much closer, that's for sure. All right, let's go. That's the Canadian. That's the Swiss. Now let me go back to the Canadian. Yeah, so the Canadian went into the buy on the 11th, and so that means that the Canadian dollar is going down against the dollar, which is usually not indicative of a strong oil market, right? Is that how you would interpret it? Now let's go over to the oil market itself, and it's kind of sideways, right? Yeah, so since June 11th, there's June 11th, oil moved up from 70 to 76. So it was very firm with a weak, well at that time Canadian had been going down, I guess. It was still in the sell. But there was a remnants, let's see if we can find it here. There was a remnants of that. And we saw how the Canadian, let's scrunch this up. You know, the Canadian was going down and oil was lifting up. So you can see like here where we went into the sell back in April 20th. And let's take a look at crude oil right here. Matter of fact, we can do it on, let's do this. Let's put it on J4X. This way we can look at both of them at the same time. And there is, see, we can do Brent too at the same time. Oh, and that's monthly. Let's make that a daily right there. And so back in April, yeah, so let's see, now what were we looking at on this one? We were looking at, let's go to the, there it is right there. So back in April, the Canadian goes strong against the US dollar. At the same time, you can see on J4X, the oil creates a bottom. We go into a bottom in our math, I think it was April. Because you can see, crude oil has been in a weekly buy now for 11 weeks on the fact check spreadsheet there. Inverse, yes, exactly. Inverse relationship, strong Canadian means weak oil, exactly. And we're not seeing that right now, which is kind of curious, because you can see here on the Chicago Quant, above the oil on J4X, you can see the it's moving up. You know, so it's been a weak Canadian against the dollar, but same token, I guess in some ways you can say, let's see if we can widen this a little bit, and in some ways you can say, okay, it lasted a little bit longer with the oil, then sold off, but still in a weekly buy, and it's battling still. And at the same time, we really are, you know, the Hinky Ashy can hide that more, you know, but you can really see if we put a line in here where it's at now and where it was when that weakness started to really break down with the Canadian. You can see pretty much as high as it, as low as it went down here, you know, went almost a little bit higher there. Same thing. You know, there's still more strength in crude, and but what it really is, it's in a sideways chop. I guess it's a basing pattern, you know. Canadian dollar has strong commodity correlations. Yeah, exactly, because you know they're the second largest gold producer or third in the world. They're the, like, you know, for the size of their country, they're what, 3-4 million barrels a day, you know, in oil, which is pretty powerful for a country that has what, under 50 million people or something like that, or 60 million people, and it's a very successful situation. Yeah, so the combination of all those, they have the minerals. Also, there's one other thing too. They're a neighbor of the United States up on the top. They're part of the Commonwealth. They're part of Great Britain, or the common, with that whole universe. And so not only, they're protected at the same time. So in other words, they don't have to worry about too much about invasion and unrest and so forth. They don't have a lot of wild neighbors firing rockets at them. They don't have that, like that Israeli thing. On a given day, someone fires 20 or 30 rockets at them. And you see that in other countries too, where they have issues like that. So when you have an industrial base like that, a modern industrial base, and you're not being rocketed and bombed every day, you get a chance to grow, and it's healthy, and so you can see the Canadian be that way. And it's a good example of the natural resources for the amount of population. That's why we looked at New Zealand Cad. That's a real popular one. Let's take a look at that. The New Zealand Cad they call it the loonie trade. And that was indicative of the same situation when the Canadian, I guess it was when the Canadian was strong against the New Zealand. It was bullish for oil or natural resources. Let's just take a look at that. New Zealand Cad right there. That is so in other words, right now the Canadian, I guess this is New Zealand Cad. So this means New Zealand is weak because there's more New Zealand currency taking to buy Canadian, and so that the strength in oil is indicative of that. And so then when we do this, when it was going down, the oil market should be going down, and when this is going up, the oil market should be going up. Now let's give this a real spin there. So back in March, this is going down, and I guess oil should be going down, and then the April bottom, you see that pop there, and then they break away from each other every so often. Now this is going down, and oil should be going down, and instead from, let's take a look at oil here, or we have it on J4X. Let's go to J4X instead. There's the oil there. So in what is that? That date there is what is that? That is July 4th, right there, like a peak with the Hinkiashi, and you see right there that's a bottom. Right there. So the strength of the Canadian should be exemplifying the strength in oil. I think that's how that works. You see, Canadian dollar has strong. Let's see, RBNZ interest rates hike in August. Aha. So yeah, that's a fundamental, and then November as well. Okay. So now lately we've done this. Let's go over to this one. We found that the euro against the Canadian is even more accurate than all of them put together. And in many ways, this kind of emphasizes how the oil is going sideways. And the fact that it's moving up now means that it's weakening against, in other words, the euro is getting stronger against the Canadian. And we are seeing it here in the J4X. You see the oil is moving down. But it's not really a lot of movement. When you really think about it, you're talking about in between 76 and 72. I mean, it's $4 in a sideways chop. When you look at it not in the Hinkiashi, because remember, Hinkiashi is doing an average of all 4 points. But when you look at it in the bar chart, if I can find the bar chart, where is that? There it is right there. In the bar chart, you see overall, it is not that much action. The price is overall kind of sideways. And that's pretty much what's really going on here at this point is the Canadian, and in this case, oil in particular, doesn't seem to want to let go at this point. In other words, there's a demand, and I'd assume that Goldman's probably right. If this thing stay the way they are, we might see $100 oil going into 2022. It may not happen overnight, of course. But it could be a slow, steady push to see the oil market lift. All right. We can come back to this if anybody wants to try to dissect that a little bit more. Let's take a look at the euro this morning and see what that's doing against the dollar. You see it's moving down a little bit, but we are flirting with a daily buy at the moment. You see that right there? And there's no dots. We got a volatility signal from it, and it's moving down, but our math is trying to turn up. But again, we can't really take it too serious because why, traders? We're in a weekly sell from up in here, so you know that pressure is on. Cable, right there. Cable doing the same thing. A lot of sideways action going nowhere. That's been in a daily sell for 2 full days since here, and went into the sell on an up day, and then it sold off. There was a nice winner chicken dinner, and it's still falling down. So we're seeing cable really in a sideways action more than anything else, supporting that 138 area that we've talked about. Whereas before it was the ceiling, now it's become the base and support versus resistance up top, which means that, you know, like the next weekly buy, this thing could drive itself into the mid 40s, you know, 143, 144 to low mid 40s or something like that. Let's see, from there we go over and take a look at Turkish Lira. We'll look at it through the dollar and through the euro. You can see this thing has been in a daily sell since here. Not a lot of action, but now we're finding ourselves on a dollar side of it, going into a weekly sell. Whereas when we look at it through the euro against the Turkish Lira, it's been in a weekly sell for a few weeks since back here. And also at the same time, it's been in a daily sell just for the same length of time, and if not more. And so you can see that pressure, and you can see how far it's sinking down. Right there, there's the weekly starting to make some pretty deep lows in here. You know, heading for that low there. Interesting. All right. It's kind of funny, you know, the way Alan put it on the natural resources, because this morning I heard Maria Bartiromo, one of the only people I trust anymore in the news media. She was talking about Canada and just natural resources in general, because of the new technologies and how everybody needs, you know, for the battery. You know, it's part of the battery technology really more than anything else. And battery technology has really impressed us over the last 10 years. That's Elon Musk's basically claim to fame, is his ability to develop new battery technology that's ahead of the curve. All right. That's why people buy Tesla, not because of the company making money as much as they have this new battery technology that keeps on improving and outsmarting the rest of the community. Now we'll drift over to, let's see, from there you'd normally go to the Canadian, and there is the Canadian, of course, you know, on that upwardly slope with the weekly and daily too. Obviously it's playing with this range here. Let's do this right there. You see it's playing with this range of where the line is. We've been watching that for, I think, over a year, that area. Let me just double check it. No, since December of last year we've been watching that area. See it there, it became the support for a while, for about all the way up to March. And then, and I'm trying to think, I think we went back, I guess not, might have been further back even when we watched it, but either way, that has been on the chart now since December. We've been watching it. Lithium metals is in shortage. Yeah, they always show those weird places where they have slave labor hunting it, mining it. Yeah, especially small children. Yeah, that's. I have a friend at the National Science Foundation. He's a vice chair in one of the committees. No, he's the chair of one of the subcommittees. That's it. And you know, he tells me all the time that when he goes to Washington for these meetings, they are enamored at the success of Elon Musk's battery technology, and that's what drives the money going into Tesla all the time. They're buying the battery technology more than anything else, not the sales of the cars. The cars are the garnish. The cars, in many ways, you know, I mean, the artificial intelligence and so forth is popular, but the battery technology is really where it's at. And he has the ability to, he can sell you better battery technology. And so what happens is that, let's say like there's a hurricane in Florida and people are trying to escape the zone of hurricane, and they have Teslas, but they can't charge up because the hurricane has knocked out the electric. He can connect to the cars wirelessly off of the battery technology, and he can tell the battery to extend its life. Can you imagine that? So in other words, he sells a battery that is capable of storing more power and you have to pay for it. And so, you know, let's say you have 3 hours of battery life, but you have to travel 4 hours. He turns on the battery so people can travel the 4 hours and some, like double. He'll double the battery life, and you can go 6 hours. And it's somewhere safe to charge and get out of the danger zone. He can do that wirelessly. He can actually talk. I think they did that on Mars, actually, to be exact, with the new rover we have up there. It has that technology, and they were only going to do 4 missions. They were going to fly only 4 missions, and they found that the artificial intelligence was so good, and that the helicopter could fly in such thin air. That was number one, of course. The ability. They weren't sure if the helicopter was going to survive flying in that thin air. That what they did is they shut down the rover after the second flight, and they rebooted it, and they gave it a new lifespan on the battery, and they used Tesla's technology, and so they rebooted it, changed, they actually enhanced the AI algorithms in it to the next generation that they were going to send in future years. And that's why the thing has flown 8 or 9 or 10 missions, and now it's going to fly like 40 missions. And I imagine if they get to the 40 missions and it's doing what it's supposed to do, I wouldn't be surprised if they reboot it again and send another generation, and it'll enhance the battery life even further. So it is, the battery technology is something that no one really talks about. But like I said, I have a friend that's part of the National Science Foundation, and you know, he tells me these stories, and what makes them all excited all the time is that the battery technology and what the capacity is. And then every so often you see these things happen, you know, where Tesla during a hurricane will, you know, come out and say, we've extended the battery life to all the vehicles in this region for free. And that I think that's astonishing. You know, I mean, that the general media doesn't even talk about things like that. I think that's just blow my mind type of technology. But anyway, yeah, that's why you see different currencies moving, because of the fundamentals and the metals and so forth, and the shortages, and you know, the equity and all that stuff. But anyway, I think we might have to label this oil and battery technology, Canadian and battery technology, and maybe we'll label it Euro Canadian and battery technology today. I mean, it'll literally be the title to this webinar. Let's see, where are we going from here? Let's go. We've done the Canadian. Now we go over and take a look at the ruble. Talking about natural resources. God, they got a lot of them there. I keep on expecting this ruble one day to be 35 or 45 instead of 70. You know, sooner or later that country is going, that the Russian Federation is going to get their act together in a good way, and they have the resources. They produce 10, 11 million barrels a day overall. You know, they have incredible amounts of natural resources. There is great opportunity there. They have an educated workforce. What else can you ask for? Let's see. You can see here ruble has been in a sell, and it's been sideways, going nowhere. And we've been in a weekly buy now, one full week. We're going on a second week here. And since it went into the weekly buy, where was it? That Friday? Right there. I mean, it went into the buy at 74.17 confirmed. It was in the daily buy from here at, where was that? 73.42. And it climbed all the way up to 75 and change. And the weekly was in it almost, I think it was all week long, really. The weekly was in the buy, so it was relatively safe to try to catch some of this wave. Let's see. Oh, there's Tommy. Doc, looks like the VIX dropped sharply in the last hour. I don't know about the last hour, but it has had no, with the selling this week. Remember last week I gave a warning to everybody? The VIX was lifting, and we got a Dow Jones Industrial Average drop of about 500 points the next day. Here, let's go over to that. Let's see, right there. Let me do this to cancel that. Let's see, which one should we lose here? I know it. I'll go here and lose. What do we have here? I'm just want to drop one of these. I think I'll do this. I'll drop the commodities. So we'll close that, and then what we'll do is we'll open up the VIX here. This is my weekend VIX that I look at. I mean, I look at it every day. It's on our chart. You can, oh, you can't see it on this chart, but I put it on my equity chart. There's the VIX right there, and there's the hump right here, and the daily buy. But we didn't get into a weekly, and I gave a warning to everybody, and then that move right there, the third day after the warning, or after 2 days of the warning, with the VIX in a daily buy, the S&P 500, which we can show you, not the S&P, the Dow Jones Industrial Average, and the S&P and so forth, fell down right there from it. You know, it was a 500-point drop. It closed at 34,588, and the next day the low was 34.29. You know, so it was like you know, a 480 some odd point drop. Let's see. So let's go back to the VIX. We can take a look at that on a short-term basis, and you can see the VIX has not been able to pick up since then, and it's just dead sideways. I really thought, I do believe, I think I mentioned it after this one right here in June. I said, let's watch July and see how the inflation is, and if inflation is not backing off, then the August one will be the one that they'll start to push hard on it. And I think that to me was where I'm at, and I said that's what, 10 minutes ago. You know, that's my opinion. You know, watching the math, that's my opinion from it. Now it has to happen. We have to see the math do it first. You know, to confirm it. Where did I want to go? Oh, intraday. Let's find an intraday on. Let's see. Let's do it this way. Where do I go here? Let's go with File, Open. Let's do the index one. Here's one of my short-term ones I'm working on right now, which is kind of fascinating. And let's make a copy of this. File, copy. Now I'm going to close this. And then right here, we're going to go File, Paste. And then what we're going to do is we're going to format this to be VIX. Okay, VIX. VI index or stock? VIX. And settings. Let's make this a like a 15-minute or 10-minute or something like that. Let's make it a 3-minute. Let's make this a 3-minute over 2 days, like that. Let's see what it does there. All right, let's make it 1 day. See if it'll spit it out. Usually, days. Let's see if it does it. Oh, you know what? I know it's not. It's a ETF, so it's not trading right now. So we need to go back a little bit further. Actually, probably need to go back 3 days. And let's make it 30 minutes for the time being, just to get it going. Let's see if it's connecting and doing its thing there. Yeah, VIX. Okay. Now you can see that that's today. That's the drop. Oh, it's after 8 o'clock. It's a pre-market, so they're reflecting it now. Okay, so that's live. So you can see the drop there. Now let's go back to the intraday. See if we can get this thing to work. Maybe I'm asking for it to do too many things. Let's do it this way. Let's see, what can we do here? Let's go with formatting this instrument and making it minutes. There we are. Still not doing anything. Let's do a Control R. Alright, let's do this. Let's just get rid of that and try it again. There's the daily. And so we can just create a new chart. New chart window. Let's go with VIX. See what the settings are. Okay. Doesn't seem to want to do it, does it? Let's try this. Oh, okay, they're doing something now. Now it's back and filling. There's a bar there. And I'm not asking it to do any work, and then I'll put an indicator in once it loads up. It's freaking it out a little bit there. Yeah, we'll see what that. So I don't know about any news. Let's see. The news came out. What was it? There was a. Wasn't CPI? Something came out. I remember it was something simple. Something came out at 7:30 Eastern Standard Time. 8:30. I'm sorry, 8:30 Eastern Standard Time. Let me see if I can find what it was. I forget what it was. It wasn't anything made. Retail sales. That's what it was. Retail sales came out. And let's see, retail sales surprised to the upside. That's what did it. After big downward revision, auto sales slump. Upside, but auto sales slump. Perhaps most ominous is that after being positive all year long, the 3-month average of retail sales ex autos plunged to flat. So that's what freaked it out. Let's see. See if we can do this here. 2. Make it 2 days back. And I don't know, let's try. Maybe it's too much work. I don't know. 5? Let's try 5 minute. I'm not sure why VIX is being so ornery. But that's the reason why. The retail sales. So, you know, I would assume, you know, look, if volatility is dropping, they're saying that, you know, markets are going up, which means interest rates are going down, which means inflation is under control. You know, I mean, that's what they're pretty much trying to tell us. I mean, it's that whole song being sung constantly. Transitory inflation. I mean, that's really what they're trying to tell us overall. Why can't we get a VIX chart? Let's see. What's up with this thing? I mean, we're generating a basic chart. Style. It's all there. It should pop up. Maybe we'll try a tick. Maybe it wants to be a tick chart. I don't know. Let's try that. I don't know. For some reason, it's not doing its thing. But the daily chart is right there. So you're right. It dropped today, and it all probably has to do with the retail sales and how they're interpreting the inflation. I mean, that's pretty much the name of the game. That whole situation there. Michigan consumer sentiment in 45 minutes. That's an important one too. That's one of the old classics that everybody watched. Is the Michigan, because you know, because of Detroit and all the retooling that goes on up there, you know, that's always been a very popular one. You know, at one point, automobiles were some insane number in America for GDP. I mean, it was something like, I don't know, 15%, 20% of our GDP was automobiles. That is one demonstrative number. Now it's nowhere near that. It's way, way down. It's like 3% of the GDP. But there was a time where, and that's why Michigan, which was the heart of the auto industry, the consumer sentiment was important up there, because obviously when they were spending money, it meant that they were working. And if they were working, then the GDP was expanding, and vice versa. If the Michigan consumer sentiment dropped, it meant that Detroit wasn't working, and since it was a large part of the gross domestic product, it was a indicator of what was going on with the overall growth, and that's the reason why. Yeah, I mean, you really want to think about it. Why would anybody care about Michigan's consumer sentiment? That's the reason why. It was all because of Detroit and the production. Now, I think Detroit only produces something like 30% of all the cars in America, or something like that. It's even less. You know, at one time it was like 90% or 95% of all the cars in America were produced out of Detroit. I think so, yeah. I really do. I like I said, I kind of think that money managers are trading with their hands underneath their seat. You know, they're sitting on their hands. In other words, I think that they're not executing too much right now, and I think that they're watching to see. There's a guessing game going on with the inflation. Is it transitory, like the chairman says? You know, the Federal Reserve chairman says, or is it systemic, and it's going to go on and on and on, and there's going to be some problems. And so I kind of interpret it myself is, if they don't see, you know, he said 3 or 4 months ago it won't last longer than a quarter. So I thought, okay, at the end of July or at the end of June is the second quarter, and you go into the third quarter, halfway through the third quarter, and you don't see the inflation dropping, money managers are going to start to speculate ahead of the curve. That's their natural tendency. Especially, here's one that's really important to remember. At that point, money managers are now 8 months into the fiscal year. They've got 4 months left, right? They're almost down to the last quarter. They may take profits. In other words, they make their bonuses, they make their money by profits of their funds. You know, they get a stipend, you know, a management fee, but their big money is the profits. In other words, you know, you might get it. Let's say you're managing $2 billion, and you might be getting 2 and 20. You're getting 2% of the $2 billion as a management fee, but you're getting 20% of the profits. Well, that's a hell of a lot more than 2%. So 20% is pretty hefty. So if you allow your profits to disappear, you're not getting that 20. You're not getting, you know, you're getting 20% of a smaller number. So, you know, if we don't see going into the middle of the third quarter, that's the August situation, we see no inflation backing off, I think money managers will get a little nervous about that, because the last thing they need is to see inflation showing that it has a continuity to it. And that's where the nervousness should kick in, and we should start to see some selling. Again, and as I started off this webinar today, will the Federal Reserve step in and firm up the market? I say no. I think what they'll do is they'll let it back off a little bit, because I think they want to keep on pretending to themselves, because nobody else believes it, but they want to keep on pretending that they don't run the market. You know, what did I say earlier? You know, 12 months out of the year, 365 days out of the year, 24 hours a day, 7 days a week. They want to pretend that they don't interfere in the market, as much as we all know they do. They could even take profits after the Michigan announcement. Yeah, because they'll be looking at the sentiment. Now, the fact that that's what they're probably interpreting from the what is it? Sometimes I think you know how we were talking about the Canadian and the correlation to oil. I think there's a correlation between Michigan consumer and retail sales, because that's what the Michigan consumer is measuring. It's measuring up retail sales is in there, but also retooling. You know, Detroit investing in you know, equipment. You know, it's all in there. You know, in that Michigan Michigan report, it's all in there. So when the U.S. retail sales is a harbinger of things to come. Sometimes it correlates and sometimes it doesn't. That's something you should Google. U.S. retail sales and Michigan. The Michigan consumer sentiment. Google the two of them and see what the correlation is. That would be a way of trying to understand it more than anything else. So that's where we are. What else we got going on in here? Let's see if that short term is updated. Yeah, there it is. And there's your, that's the drop. Remember, this is not a 24-hour thing. This is, so it didn't do a full drop like that. It just started off lower right off at 8 o'clock. So they were already anticipating weakness. Because that's, there's yesterday right there. And that is today. It started a half hour before the news came out. So they are already anticipating that drop. And that's a 50 tick. And let's see if we can get this thing to do like a, you know, 15-minute or something like that. There you go. So it was in this upwardly push since Monday, and now you know you can see it did the same thing like here, dropped and then climbed back up, and it rolled down and it gapped up on Thursday, and now here, no, I'm sorry, on Wednesday, and on Friday, you know, no noise, you know, it was kind of quiet in the sense of there's Thursday, and now they've gapped it down again. So this thing can gap and jump, and you know, interpretations are all over the place. You can see here on Monday they gapped it up, and by literally before, here's the hour before the New York Open, hour and a half before the New York Open, and then right here is the New York Open. It bottoms in the first, I guess, in the first hour and starts to take off. So by the time Europe closes, which is at 11:30 our time, which is kind of funny, this is all European pressure, the U.S. the rest of the day lifts it back up. Then you get the European action again, and then here it is at, now this is the London close and the European close. They spike it up, and then we sell it down. It's crazy stuff. Crazy, crazy. Oh my God. Let's see. They could even take profit after the mission. Okay, so Alan Tommy says Democrats believe $5 trillion not enough to build new infrastructure. At this point, that's all fallen apart. That is fallen apart altogether. At this point, I understand that AOC, the congresswoman from New York City, said, if nothing else, we will pass the Republican budget. She said that last night. So I don't think they have the votes. They can't do it through reconciliation. They have 3 Democrat senators that if they even remotely tried to vote for it, they will not get reelected. So they are not going to throw away their careers for some stupid idea. And so, as far as I can tell, this 3.5 trillion now it's down to 3.5 trillion, is going to disappear. It's going to go away. They don't have the votes, and they're not going to get the votes. You know, it just isn't there. All right, what else do we got going on here? We have anything else? Anybody missing a currency? Let's see. Let's take a look at the South African rand from the situation. I understand that the troops are now stationed. You know, it's the ANC again, Zuma. You know, I mean, you know, they locked him up for contempt of court, and his followers are tearing the country apart. It's like a mini civil war of the ANC. That's really what it comes down to. Let's take a look at the ruble. Not the ruble, the South African rand. Right there. I don't know, it seems to be calming down. The troops are out now, the currency has stalled out. Obviously, someone had an idea what was going on, that Zuma was going to have problems and get locked up because of the way the currencies move. Remember, it was moving differently from the gold market, and we talked about that here last week or the week before that. We were talking about it, how the South African rand seemed to break away from gold. Well, they knew that Zuma and his followers were going to get nuts, so they front-run the currency. I mean, that's pretty much what it all comes down to. Oh, let's check out the peso. Thank you for reminding me, Moses. Peso, right there. And that's really flattened out. Now we're really, look at that. Today's Friday. We are 0.0470. No, I'm sorry. Plot 1. See it? Right underneath there in the white box. Plot 1 equals minus 0.0019. It's still negative by the hair of its chinny chin. It's changing live. You can see it going back and forth on the white line. 17 now, minus 17. It was just minus 20, or 0020. So it's still in a weekly sell. Now today they're pressing it down again. So we'll see. I mean, if they put the pressure on it, it may survive. All right, traders, we're out of here. Everybody have a safe and smart weekend, and we will catch you all on Monday. TGIM is coming. Thank goodness it'll be Monday. All right, Doc from North America saying aloha. Happy trails to you until we meet again. Happy trails to you, to all our Dukascopy trading friends. Aloha.